Good morning, everyone, and welcome to the pre-market morning market analysis for Wednesday, October the 23rd, 2013. If you're watching this video after the fact from YouTube, Quantum Leap is a self-organized learning environment. We run a private Skype room. It's a chat room 24 hours. I also run a live trade room during the day, and we also have some educational packages. But each morning we come together and we go through our market review. So if you're interested in checking it out and checking out the chat room, you'll need a Skype account. You can give me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Or you can contact me through my email, dm@m4connects.com, or give me a call directly on my office line after market hours. So each day we come in here to get set up for our trade, but we have to get the legals out of the way. So let me just bring the disclaimer up. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves a risk of loss. Please consider carefully whether futures or options are appropriate to financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than the initial investment. Nobody from Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for your education purposes only. Please do your own due diligence and trade your own plan. Okay, so usually we start with going through the macro to the micro and the numbers. And we do this. We've been keeping this homework sheet now for several years. It's got extensive data and all the levels that we're looking at. And the end of each day, we post what we call our QLTP into the trade room. And that's the result of our homework spreadsheet, where it'll give you a ladder above the close, previous day close, and a ladder below the previous day close. There's also an extended sheet for when we go off of the when we make big vertical moves. But what it does is have all the different numbers that we're looking at based on all the different key numbers, different methodologies, volume profile, Elliott wave, moving averages, Fibonacci, etc., and it's put in and put out to the room each night as part of what we do for Quantum Leap. And then it's got a news section. We're going to be adding our hypotheses in here coming in November, so this sheet is going to change. But usually in the morning we'll go through all of these numbers one by one. In order to try to shorten things up and keep these sessions as short as possible, I'm just going to point out the key things on the sheet, and we're not going to spend as much time, and we'll get right into the chart analysis. Of course, the big number that we need to pay attention to is the new high that we put in, and you can see our monthly high. We put in 8 straight days of new monthly highs, with the new month high, year high, all-time high at 1754.50. Our week opened at 738. We're nowhere near that. Our week opened at 1738. We're just above that, trading in the low 1740s right now. We're nowhere near. We're above last week's numbers altogether, except for the close, and we're above that. So the trend is very strong right now. Quarter number is new. The big thing here is the fact that we've been trending very strong in terms of the daily. I mean, we've got 9 days of higher opens, and this will probably be the first day that we have a lower open on the RTH if we don't get back above 1744. And you can see that all the intraday numbers have basically been trending very strong. So we're in a very strong trend. The ranges have been expanding as well as we, what I consider to be our blow-off top. And more importantly, our value area, the accepted value, has been increasing, steadily. So, things are very strong, but I think we're going to start to see a little bit of weakness come in. So I always will start with the macro and micro, because you always want to understand where you are within the different time frames in terms of the trend. So I look at the basic trend charts. I run a 9 EMA and a 20 SMA on all my charts. I run a couple studies from this. One of the most important one being naked crosses, where the 9 EMA crosses the 20 SMA, and price action moves away and leaves it naked or untested or unauctioned. The market has a high probability of coming back down and testing that number. Very rarely will you see a naked cross be left for any length of time, and we watch them on the intraday on the 5, 15, and 30 minute. But in terms of the monthly, we got good slope and separation on the 9 and 20. We have not closed below the 9 EMA all year long, so the monthly trend is very much intact. We've got a bit of a floor support rate here happening at the 1628 area. I mean, we're nowhere near that right now, and we're trading above all the previous months' highs, lows, opens, closes. So we're in the upper distribution, and the trend is very strong on the monthly. On the weekly, we've got a possible head and shoulder pattern happening. We got a bit of a tech gap. Tech gap is where the price moves away from the 9 EMA, just like this is a perfect tech gap right here. Price moved away from the 9 EMA, and it will always get closed. It'll either get closed through time as price goes sideways and the 9 EMA catches up, or it'll close through price where the price comes down and meets the 9, or a combination of both. Usually it's a combination of both, but anytime you get price going into a parabolic move away from the 9 EMA, you'll generally get either consolidation at a newer value higher, or value will come back down to meet the 9 EMA. And currently right now we've got a tech gap happening on the weekly, and a possible head and shoulder pattern. We had a little bit of weakness a few weeks ago. We thought we were rolling over, and then they spiked up with the QE news. Then government shutdown brought us down. Looked like we were going to close below the 9 and the 20 again. The second time in the year, only the second time in the year, but we popped up, with the government resolution and taking on more debt, and bam, we get a nice little pop. Going to the daily. Well, the daily is really showing how this last move, how strong it's been, and how parabolic it's been, and creating a gap. Yesterday, we got, overnight we got a little bit of a retrace. I re-entered my swing short position. I am running short, and I'm going to be building my swing position short aggressively right now, because I think even if 1754.50 doesn't remain to be the all-time high, I think it's going to be the interim high right now, and we should get a retrace. In my target right now for the retrace, first major target below is 1710, and I'll show you why when we get to the other charts. But we do got slope and separation on the 9 and the 20, but we do have a technical gap that either will consolidate up in this area and chop around and go sideways, and the EMA catches up to us, or will come down to meet it again. I think we'll get a combination of both. Going over to the geometric chart, I added a new fork. We broke ways outside of the downward sloping fork that we were following, so I eliminated it off the chart altogether. I put in a modified shift chart using this swing low as the A point, the high as the B point, and the last swing low as a C point. And you can see it's created a couple energy points here. We've got, if we do continue to have strength, we're above the center line of the upward sloping modified shift chart, that a fork that we added in, and we're above the center line of the long-term upward sloping fork. I'm looking for a rotation back towards the center line of both of these to test them from above. But if we do get continuation, you want to look for a move up to the upper line of this fork and the upper line of this fork. But through time, we're likely to come and test this energy point if that happens, and that's going to be in that 1770 area. We have that measured move to 1780, and then the big number above is up here at 1808, 1809 area. Of course, coming down to test these in the next couple days will bring us into the 1730 area or the 1720 area. we have an energy point here at 1719. And who knows exactly what's going to happen here, but usually when you break through and we have this strong a move up, they'll come and test the center lines from above. Going over to the intraday to take a look at where we are in the intraday trends. 4 hours been very strong. This is a good example of a tech gap that's closed through time. Created another tech gap with the move up and the spike up, and then we came back and closed it late in the day and into the evening. And currently we're trading in between the 9 and the 20. We're trying to get back above the 9, but we've lost slope and separation. So we're seeing that the strength of this trend is weakening on the 4 hour. Going down to the 30-minute, you can see that overnight. We rolled over and we're trending. We've been trending down. We found some support, and we're getting some consolidation. And they moved up, and they've got to close above the 9 and the 20 right now. And we're coming into an MA squeeze or a MA hug, and kind of a decision point whether or not we break back down through it and continue the downward move, or we start the beginning of a upward trend. Not really a lot of information there. So let's go over to the composite. And I think the key thing here is the composite really doesn't give us a lot of information because of the fact that the composite is only consisting of the days that we've been trading up here, and we really haven't had any balance yet up here. We started down, all the way down here with this first gap. We've got one gap, we've got two gaps, we've got three gaps. We've got an open gap here for the open. We've got another gap. This to me is turning into a blow off top and an exhaustive gap move. And we've got to get some consolidation. They've got to pause, even if they just pause and find value. Before they continue to move up. But I think the more likely possibility is a rotation back down towards prior balance. And if you add a profile onto these 2 days right here, the big number below right now for me is this 1738, where they paused and found some balance within these 2 days. We did have a little bit of rotation here, and the other one is down here. If you put a profile on these 2 days, is that 1713 area. And with the other side of balance being 1710. And 1710, we have a bunch of naked crosses on the intraday that have not been taken out, and that's why I'm looking at that 1710. So the number that you want to pay attention to, right now, is we're trading between the two CLVNs at 1742.75 and 1740.75. If we get below 1740.75, we're likely to come down and test this 38. And I believe we came down and tested the 38.39 overnight, and then we bounced from there. If we get back up above 42, then look for a rotation back towards 1745 and 1747.75. We really found some balance during the intraday there yesterday before we made the move up to that 54 high. So not a lot to go on here. So we've got to look at the intraday. Let's take a look at what happened yesterday. Yesterday morning in the session, we talked about the fact that we were opening up out of range, and that you wanted to watch to see if there was initiative buyers stepping in and taking us to new highs. Well, that's exactly what happened. The two hypotheses I had yesterday is initiative buyers coming in and taking us to new highs, or coming down and testing this 42 and then moving to take out the overnight high that was put in the Globex. But if we got inside of the body, a rotation down to that 38.75 naked VPOC and the naked close. Well, the main hypothesis of initiative buyers coming in, took us to newer highs. But then we came right back down and tested that that range high at 42.50. Tried to push through, couldn't get through. Had a nice hammer right here. Took us back up, came back down, tested again, and bounced off. And what did we do? We drifted up higher the rest of the day back towards the all-time high. But we did not put a newer high in. We had a lower fractal high at 53.25, and since then we've moved down and rotated down, I believe almost all the way back to that 39. Let's take a look at the overnight chart and put our overnight numbers in to our trading chart. So our overnight high, 50.25, so that's another fractal high that's lower. You had 54, 50, 53.25, now 50.25. That's showing weakness. So our overnight high is 50.25, just above our naked close. Or the gap that we're going to have this morning at 1749.50. Hey, this is the first gap that we've had to the upside. So maybe this is, will give us a few gaps to the downside and we'll get some type of an island top. Of course, we've got the naked VPOC from yesterday at 1749. The overnight low is 37.25, so we did come down and test that 39 CHVN and that 38.75 level, but we did it in the Globex, so it remains naked, both the naked VPOC and the naked close at 38, and we have a low of 37.25. So put our overnight low in at 37.25, and of course we found balance overnight in around the 40-50 area. So we have to put our our overnight VPOC. So we're currently trading just inside of the prior day range. On the low side, we have the 41.75 range low, which is also a CLVN area. So this is going to be a trade area for me right here. At 41.75 is a range breakout, and if we break down, I'm looking for it to go down and take out the overnight VPOC, the naked VPOC from yesterday, from 2 days ago, the naked close and the overnight low, and then we've got that 34, and that 34 area is this next CHVN down here, but more importantly, it's the range low from Tuesday and the naked VPOC, I believe, from Monday. So, we've got a lot of work to do down here. If we stay and we hold the range, look for a move up to test the value area low from yesterday at 45.50. And if we get inside of that value area, look for them to go and take out that naked VPOC and close the gap, the overnight high at 50.25, and then if we stay in the value, then I'd be looking for a move to the 80% rule, value area rule at 17.52. So the other areas that I'm going to be looking to do business is going to be at the value area, low, and then this LVN at 48.25, and then if we get inside of this, I'll be looking to reshort. I'm going to be running both short and long. I'm running 2 accounts right now for my swing short, so there will be times where I'll be short and long at the same time, and then of course if we break to new highs with a range breakout and a break to make new highs. I'm not anticipating a move up to 54.50. It would be very surprising, but hey, with this market, you never know. Looking at the Keltner, a test of the upper Keltner channel will bring us into that 46.25, or a test of the value area low and the lower distribution from yesterday. Center line test will bring us down to the overnight VPOC at 40.50, and then if we get back below the Keltner center line, a move down to test the lower Keltner channel is going to bring us down into that 34 area. So we've got some strong targets within the Keltner on the Renko. I do want to point out that we have and it hasn't. It just validated. I drew this a little bit earlier. We have this. It's kind of a messy inverted cup, but we've got an inverted cup with the rim line being at 1737 and a quarter area. we've come up and we've validated the pattern by retracing to 38.2 Fibonacci, 30% Bulkowski's rule. I used the 38.2, and we've got two targets. We have 1734, which is the measured move using the Bulkowski's rules that Sam draws. Of course, I've always been doing it the same way I do my regular cups, but the proper measured move is down to 34. That brings us back to that 34 naked VPOC, and then how I've been drawing them, 17, 21, 25. Not sure if we'll get that big of a move today, but this pattern is still valid until we break back above 1747 and a quarter. Just keep that on your radar. Going over to the composite for gold. Yesterday we were saying that if we held above the 1304 CLVN, that we were trading around the microcomposite VPOC at 1318 when we were doing homework yesterday morning, and I said, look for a possible move of chopping in here and testing the upper side of balance at 37 and a quarter, and then the upward target of 1345.10. And then yesterday in the trade room, the live room, we talked about it in the morning trade session, as we had a flagpole set up yesterday morning. Let me bring that up. And we looked at this. I didn't draw this until after the homework, and I posted it in the Quantum Leap room sometime in the mid-afternoon after we had made the move. But we did this live in the live trade session, and the breakout of the flagpole gave us a measured move up to 46.40, and we got up to 44.70. So we didn't quite make it, but pretty close. And again, none of these patterns are to the penny. You have to take them with a grain of salt and a little bit of artistic license, but it gave us a good target to look for, and that was right in line with our upside target of that CLVN at 1345.10, and we basically got just up to it. Right now we've come back down off of it, and we're trading still in this distribution zone. We've already broken out of the 3780 microcomposite range high here. If we can't get above and hold above the 37 and a quarter CLVN, I'd be looking for a rotation back towards the 24 area, which is the value area high of the prior microcomposite, and just below the VPOC from the other microcomposite. There's a lot of confluence within that area, with a drift down towards 1318, with that 1310 value range low and value area low, and right near that former VPOC, which we were talking about for this move down of coming down to that 1309 area. I think that we could come down and retest that again. And then the big line in the sand below is still that 1304 30 CLVN, which is the other side of this distribution zone. If we get below that, your targets below is that 1292 area CHVN, the 1284, which was the big target below, but the main target is down here at that 1268. I don't think we're gonna get down there. I think they'll come down likely sometime this week and test the other side of balance again. But I think that you're going to see people are going to try to hold gold back up into the 1300s. Anyway, that's what I'm looking at. Howard, over to you.
So, looking at the daily chart, we can see that we still have a string of very strong buying coming in since our low at 1640. We've come up 114 points to make our current high, and we're at least consolidating a little bit starting in the Globex session today. We've got large separation between the 9 and the 20 moving averages and are well beyond this 20-year fork line so far. But, you know, in the large time frame view, we need to evaluate what happens should we retrace back down to this line, which right now is in the 1715 to 1720 area. And to see if we do retrace down to there, what it does there. You know, if it holds the support, then that could become a springboard to continue higher. If it breaks, then it's potential that we've seen at least an interim high for a while, and that in the longer time frame, this would be considered a failed break. But, you know, time will tell. Those are just a couple of possibilities to be on the lookout for. I'm just saying that this is going to be a key level. So now let's go take a look at market breadth. So starting with our advanced decline and up-down volume, we see that they are continuing higher. We now have a higher high, which confirms the higher high in price. And we do have that in the advanced declines. And not quite yet in the up-down volume, but very close. So we're on our way to negating the non-confirmation we saw between advanced decline and up-down volume versus price. And we'll see if we continue showing additional strength. Now let's go ahead and look at the sectors. So we see we had a higher high in price yesterday. We're seeing a little bit of a mix in the sectors. Generally, they all agreed with price. We have a couple of exceptions, including our front runner, which is the retail sector. Retail sector is up just short of 32% on the year, but it has started topping here. Technology also has leveled out. Looks like the remainder of the sectors have moved higher. Financials more flat to slightly higher. So we had more non-confirmation yesterday. Still have a little bit today, maybe not quite as heavy, but there is a little bit. Our Dow transports versus industrials. No change here. So one more measure, we'll look at the unbalanced volume. We saw a little non-confirmation there yesterday. We've come close to negating the non-confirmation. We still have just a slight lower high here, but it's making up for lost ground. So with that, I'll turn it back over to you, Doug. About 15 minutes to open.
Thanks, Howard. All right, so just a quick review. We've got news is already is coming out The import price is already out. HPI is already out, but we've got Canadian bank rates coming out at 9. The Bank of Canada monetary policy is coming out at 9:30. Then we've got crude at 9:30, and we've got the press conference for the Bank of Canada at 10:15. Might get a little bit of response on the Canadian bank rate, but the rest of it, the big one would be the crude. We are currently trading right now at 42.50, so we're still holding inside of the value area. Look for them to come down and on the open and test the range low at 41.75. If we don't get below it in the next 15 minutes. And then if we break through, I'd be looking for a strong move down to 1738.75 and this area of confluence down here below, with possible destination and lower target down here in that 1334. If we come down here and the buyers step in and hold us inside of value, look for a rotation back up to test the value area low from yesterday and that 1745.50 area. Above that, an inside value, look to go and close the gap above and the naked VPOC and the overnight high, with the upside target being the value area high at 52. I'm anticipating that if we do that, that we'd get a strong reaction off of this 52, and sellers will take us in to rotate us back towards the 49. But again, my main hypothesis is to break back outside of this balance and move down towards 38 and 34. That is going to complete our morning session. Shaved a little bit of time off of it. We're going to try to get better and tighter as we go, and try to get these sessions down in around 20 minutes total. Anyway, everybody have a wonderful day. Trade well, trade safe, and we will catch you on the flip side.